Morning, Fractal Effects team. Please make sure you guys read the disclosure. If you're following along with us today, make sure you do in a demo account. As this is for educational purposes only, we are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. We have the indices here. Just hit 1030, so looking for a confirmation. We have a true nested model where each progressive session has stayed within the range. The midpoints are roughly at the same point. So if anybody's familiar with the concept of mean reversion, we keep playing that midpoint, down, midpoint, up, midpoint. So we had a bullish confirmation during Asia session, but we left, we retraced all the way deep, and then we eventually ended up just gesticulating back and forth, and then we broke to the bottom. London, we had a downside confirmation, nice retracement back to the 238, and then a nice extension to a little short of 2 standard deviations. A lot of consolidation happening. Not the most prettiest market today. We're just going to wait for confirmation. We are obviously bullish on the higher time frames. The daily, the 4-hour, and our 1, 5, and 15 match up. But we just want to get a confirmation. Similar on US 500 as well. Now this is CPI week. That I believe drops tomorrow. And today there was a very low to moderate FOMC news. I believe it was definitely wasn't Powell speaking, but we didn't really shake up the markets too much today. And obviously no other assets have confirmed either. So for anybody joining us for the first time, we usually just start off with the indices, and then we have alerts set up, and wherever we get confirmation first, we jump over there. Might be Forex, might be precious metals, might be Bitcoin. Strategy works the same across all these different assets. So right now we're sitting inside New York's fair value gap. There's London's fair value gap there, so we're literally between both of them. I believe that's Asia's fair value gap right there, that skinny green line. So all three of them are right there. We're rejecting from the midpoint of London, and then we're also rejecting from the midpoint of New York. So the market is just engineering new liquidity. People going short from here off of London's fair value gap, people going long from New York's fair value gap, consequence encroachment. Since we're green, we have a nested model. Think about the nested model. First of all, it's very rare. Rarely do you ever see like all three of them lined up like this where their midpoints are the same in the mean reversion theory where you keep coming back to the midpoint. So that's why it's important for us to wait for that confirmation. But we have taken out both Asia and London. Did we take out Asia highs? Yeah, we took out Asia and London highs. Swap these relative equal highs. With London low down here. So we did just get a confirmation on GBP USD. We're going to switch US 500 over to that. Red across the board. Makes our job a lot easier. Downside, expansion model, bearish confirmation. We would just wait for relatively small range. We're almost at 0.5 standard deviation with our confirmation. Excuse me. But we have had no early retracement. Big New York fair value gap there. I'd like to see it drawn a little deeper. Since it hasn't touched the 20 in a while, I want to see that before pushing back down. Just want to check out previous day's New York session. A lot of consolidation yesterday for the drop. 1 minute 27 seconds before this candle closes, so we don't know if that fair value gap's going to stick around. We do have a few breakaway gaps here. Let's just refine this. So we're either going to push past this, tap in here. That's what we're going to start looking for the sell. Or we might get some gesticulation here. I want to see if this fair value gap stays open. Since it hasn't touched the 20 in a while, that's where I want to see it. And if it leaves without us, it leaves without us, but that's where the highest probability trades are. Excuse me. Nas still gesticulating between those 2 points. Still engineering new liquidity. We just got a confirmation on oil. We're going to switch over from the indices to oil. Might take a while before we get a confirmation. Once we get a confirmation, we'll jump back. Oil, a bit of a mixed bag. We got 4-hour daily bearish, 5 and 15 bullish with a 1 minute bearish. We're bouncing off the 238. We had a slight downside expansion model originally, but now we're well above London. I want to see what it does at London's fair value gap if it just shoots up from here. So we have a bearish confirmation. We had a big bull move right out of London. So until we get 5 and 15 turn red, because we want to make sure we stay on trend, we want to make sure they're matching up with the higher time frame. Otherwise, it could just bounce off of London's fair value gap and push back up and continue bullish. We've had no early retracement. That's a good sign. And the only real fair value gap of interest, actually, is the midpoint. Yep, no other fair value gaps in here. We'll stick more to GBP USD. This is more interesting. Now, anytime we switch over to these different assets, make sure you know your lot size. Each asset, their lot sizes work differently. Or if you're trading futures contracts, make sure you understand exactly how many handles. You can download a pip calculator. You can just find one on Google. So this candle did close, leaving another fair value gap here. We could just bounce off of this and off of the bottom of the dealing range, this gray line. But as I said before, it's been a while since we've touched the 20 EMA. I'd like to see it draw in. Most likely, I'd like to see the 20 get it into this fair value gap before we push. Could it do it just from this fair value gap in the dealing range? It could, but that's not where the higher probability trades are. It's deeper into the actual range itself. Fair value gap, 20 EMA, that's what we want to see. The highest probability trades are when it bounces off of both of those. We have time. It's only 10:43 Eastern Standard. Our goal is to be in a high probability trade before 11. Around 11:15. So it's left this fair value gap open. We're gesticulating around 0.5 standard deviations, but we want to see it draw in and tap here. At any point, you're wondering what asset we're looking at. We have it's the GBP against the US dollar, Great British Pound. Oil has now tapped London's fair value gap, but the 5 and the 15, they're still bullish. And we have a bit of a mixed model here. We had a slight downside expansion model, but New York has swept all of those levels. At this point, London has not pulled back at all. So if it just keeps going and sweeps everything, there's a higher chance that it'll most likely just push up. So still more interested in GBP USD. Today is Tuesday. Usually the the footprint of Tuesday. It can set the lows for the week. Just want to see where previous day's lows were and highs. So we're well below previous day's lows. And here's previous day's highs all the way up there. Just so we know exactly where we are. Drop back down to the 5. No real retracement for either of these. We also just got a confirmation for US 30. And take a look at US 30. I'm more interested in that than oil. Oil's giving us a bit of a mixed bag, mixed signals right now. Let's see if it's cleaner on US 30. Okay, so we have a bearish confirmation. It's a counter trend trade since we are bullish across all indices. It also has the same nested model, with New York having a bigger range, but the midpoint being roughly in the same area. Given how bullish the indices are, I'm not interested in taking a sell, especially not with a nested model. Again, we could just see it gesticulate, hit the middle, go up, hit the middle. It could continue to play the middle the whole day. Usually what a nested model looks like on a daily time frame is more of a doji candle, where there's not a big range. It's wicked down and it's wicked up, but it usually Like watch, if we look at it on a daily time frame, it's a small candle that just keeps wicking back and forth, and by the time it's done, it might just end here and give us one of these kind of candles, for example. So counter trend trade, not something I'm interested in doing during a nested model. London, GBP USD, still no pullback. Just leaving breakaway gaps. This one not filled either. Our 20 EMA almost within that fair value gap now. I'd like to see it meet it right here and then push down. That's the play. Now we just got to kind of sit on our hands and wait. Still pushing down. We're stuck right around 0.5 standard deviations. This is a good place for us to see it pull back in. And it's due for a pullback here as well. The crossover up here hasn't touched it since. It's in the entire session. About 9 minutes left till 11. Make sure your charts are set up to New York Eastern Standard Time. The option is just right here in the corner. Just click that and you can pick the time zones. US 30 had no early retracement. It's below the 238. If it was any other model, but especially ahead of CPI, you want to make sure you're only trend trading. Do not want to go counter trend, because the market uses CPI, PPI, FOMC, all these big news, these red folder news events as smoke screens to reprice the markets. So you could have a huge jump, which means the days prior you might just see consolidation, and then the big move happen obviously on Wednesday, tomorrow. And we don't want to be caught in anything like that. So only trend trading on those weeks, and especially though, given how bullish the market is right now, you don't want to stand in front of a runaway freight train. GBP USD, still no proper retracement. About 7 minutes till 11. No extra fair value gaps created here. If this market just excuse me, if this market just keeps pushing down, we hit one standard deviation, then we'll switch over to another asset. But it's due, heavily due for a pullback. So until that one standard deviation is hit, we still have room. Ideally, if we come into this fair value gap, now we can get our 3 standard deviations even just to the bottom of this. But again, we want to first see it come into the range, and then we want to make sure there's confluence across all time frames. We want to see it actually give us the signal to push down. I'd like to see it push past this fair value gap, even though this is an area of interest. We have the bottom of our dealing range. It could reject off that. It could bounce off this fair value gap. I still want to see it hit that 20, especially given the fact that it already went 0.5 standard deviations. So if we're going all the way to 1, this is the better entry. It gives us the room to get to 1. If it doesn't come up here, that's fine. If it just gesticulates while that 20 comes down, that's okay too. They can tap that. But I want to see it touch this 20 first. Otherwise, I'm not interested. 3 minutes to 11. Anybody watching this stream for the first time, please make sure you check us out on Instagram, fractal.effects. Always posting new educational material up there. And always running contests, 6-month free giveaways, etc. And at any time you don't see us on YouTube live on Tuesday, Wednesday, or Thursday, just go check us out on Instagram to see if there's been a change in schedule or if we're having any kind of technical difficulties, etc. US 30 here on the left. Now the 15 has turned bullish as well. I'm going to go check oil for a second here. So we got our bearish confirmation, no real retracement. Just keep an eye on it. GBP USD reacting off that fair value gap now. Do we tap the midpoint of it? Roughly. Not quite. Getting a long wick. Remember, the midpoint itself is actually further away from the dealing range. We want to see it touch one of the key zones. So if it touches the dealing range and the fair value gap, that at least counts. Right now it has not touched the dealing range, and it's barely touched the midpoint. Here comes our 20 EMA, now into that fair value gap of interest, our original one. That's where I'd like to see it go. That's what gives us the room for the 1 to 3. And that would be a safe 1 to 3 where we're not even aiming for 1 standard deviation. We're only aiming for the bottom of the range here. So if we get in here, that would be our TP. Bit of a small range today, but that's fine. Ahead of CPI news, it's okay, as long as you get your 1 to 3. Oil still pushing down, no pullback. It's taking out London lows. And not too far from taking out Asia lows. There was no way you get in here. Just confirmed, shot down. Hasn't tapped anything, hasn't tapped any of these fair value gaps. So in the next 15 minutes, we want to see a trace up here and find our high probability setup. We'll add in a few more Forex pairs as well onto our watch list. It's really good practice. London extremely bearish. Almost swept Asia lows. Look at that drop. No retracement. GBP USD. Still stuck here at the bottom. I want to see it push through. Excuse me. Still no retracement. So we have about 3 candles to get up here. Slowly pushing up. Our 20 now slowly making its way outside of that fair value gap. They might just meet down here, which is fine. Then we got the 20, we got a fair value gap, now we got the bottom of the dealing range. or even the dotted line here, which is the implied dealing range. Either or. Up here, the only area we're interested in. Now let's move this down to see what it looks like if we got in here. Drops to 1 to 3. 1.86. So it's not looking good there. Even here I'm okay. I'd like to see it shoot up at least past this. Keep in mind we have not bounced off of any key points yet. Did not touch the dealing range. Has not touched our 20. Has not entered back into our range. So again, if it pushes from here, that's fine. Can't feel guilty about that. $11.07. Still got some time. London just short of taking out Asia lows. No real retracement yet. Slowly pulling up. Still driving down now. $20 now outside of that fair value gap coming into this one. Close to that 1 standard deviation. No other assets have confirmed yet. And we never touched the dealing range. Said it before, this has to look obvious. Can't just play tricks with you where it comes close, pulls back, comes close, pulls back. You want it to literally hit your levels and then start to reject off of them. We have not seen any of that yet. But it is giving the 20 EMA time to get down here. So anybody who is new to Fractal Effects, keep in mind all of this is inside the indicator itself. So the EMAs are higher time frame EMAs as well. This lets us know exactly whether or not we're on trend or we're counter trend trading. You want to make sure that the daily and the 4 hour match your 1, 5, and 15. So we don't have to jump across different time zones and take a look. We can just take a look in the right hand corner and we know automatically what's happening. Match up your expansion models, confirmation, box color, and your fair value gap of interest. But all of these are now part of the same indicator. Originally we had two separate ones and then a separate EMA. But now you can control everything from the settings. You can turn this off if you want. You can turn the EMAs off if you want. Just hovering above one standard deviation. Still hasn't pulled back to the 20. Now that the 20 is down here. Keep in mind, we don't want to just jump blindly into a trade either. If there's no 1 to 3 standard deviation, 1 to 3 risk to reward, then it might not be worth it for us. Oil almost swept Asia. Again, no pullback whatsoever. So historically, when you go to Fractal Effects, where we have 20 years of historical tick data, you can actually see, you can break it down to Monday, Tuesday, Wednesday, Thursday, Friday, and you can see exactly what GBP USD or any other asset did every Tuesday, exactly when it pushed, where it retraced to, and it gives you an overall idea of when that move could happen today. So according to the historical data, we went on average 2.7 standard deviations. But just for the sake of these YouTube educational videos, we're only concentrating on 1 standard deviation. So NAS finally confirmed. Let's take a look at what that looks like. Surprisingly enough, it actually confirmed bearish. Remember, we were green across majority of these. But when you have this nested model, it's mostly just seeking out liquidity. So now we swept these two lows, all this lows right here, these lows as well. But again, with the indices not looking to counter trend trade today, not the day before CPI. We're at 11:16, about 14 minutes left. I was hoping to get up here before we hit one standard deviation. Today we do have a small range here on GBP USD. But until it comes back into the zone, it's not even worth it. Now the 20 EMA is inside this fair value gap. So we have the bottom of the dealing range, the 20 EMA, and this fair value gap. Consequence encroachment, which it has not hit yet fully. We just tapped it, but we didn't hit the midpoint. So again, we could have one quick jump back up. If we did, what would that look like? Now that we moved our stop loss down to this fair value gap, could give us a 1 to 3. But ideally, we want to see this retracement happen before we hit one standard deviation. Otherwise, it's not worth it. Got 12 minutes left in the stream. Make sure you, when you're practicing at the beginning, obviously you're in a demo account, make sure you check out every single session. Trade London session. Stay up one night, trade London session. Trade the Asia session. Because keep in mind, there's 3 different sessions and 3 different opportunities, not to, just on one asset. So 3 opportunities on one asset every single day. So just because we are kind of restricted for time, and we're always just trying to jump into a high probability trade within a small window, doesn't mean that there aren't multiple setups. But the beautiful thing is, it's only 1 hour. You don't sit there watching the entire session. So if you're not in a high probability trade setup 1 hour after the range formation, you're done. Move on to the next, wait for the next session, wait for the next asset to confirm. NAS now pulling back into the range. Right across the board, nested model. Look at all this back and forth, we're not interested. Especially this late in the game. That's a very late confirmation. About 9 minutes left in our stream. Our 20 EMA is now inside that fair value gap. I'd really like to see it push up here in this next candle or two and tap that. Push down. Make sure you have some kind of market news website up. We use Forex Factory. You can use anything. At least you know if there's any major news drop for that asset that you're trading. You don't want to be stuck trading during a time where some big news is dropping. Slowly starting to make a move up now. Let's see if it taps here. So pushing down. We're getting some reaction off of NAS now. Retrace back to the 20. And again, this thing will most likely push down to take out these lows, but I don't want to do a counter trend trade this week, especially not off of a nested model. If it was a upside expansion model, a downside expansion model, and we're counter trend trading, that's fine. If it was a contraction model, that's fine. Nested model, and I keep in mind nested model is where the midpoints are roughly the same across all the sessions. It's mean reversion. It keeps reverting back to the midpoint. That means there's no real direction. So we'd just be going for these small moves to maybe sweep that low or sweep this high and keep coming back to the midpoint. So we've already reached one standard deviation. There was no real pullback to the 20. And we have no other asset confirmation so far. So remember, there was a high probability that we were going to cross the bottom of the dealing range and go into the range itself. That's where the high probability trade setups happen. A rejection off of this fair value gap without hitting the dealing range, without hitting any of our levels, it's a lower probability. Doesn't mean that it can't happen, it's just not the safest. So we've already hit one standard deviation, and again, it doesn't mean that it can't go lower, it doesn't mean that it can't come back up and tap this and then continue. But we want to make sure we're in a high probability trade setup 1 hour after the range formation. We want to be out by noon. And this was a nice setup. Just it did not come back up here and tap and give us our entry. Otherwise, it would have been clean. Downside expansion, bearish confirmation, right across the board, below all the EMAs. We just never tapped our 20. It never gave us our entry. Close though. NAS, again, still stuck there. Just a whole bunch of back and forth. This is not a market you want to trade. Look at this. For anybody who even got in up here, look how many times it tested your entry. Looks like GBP USD is going to continue to push down. And that's our time. Please make sure you check us out on fractaleffects.com. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. And we will be on tomorrow.